NASDAQ continues to fight with the 13.2 level. This was the level we pointed out this morning in the pre-market live. You can just see right in here, you've tried to get through it a couple times and it's usually rejection. This actually happened at 5 o'clock in the morning. Obviously, you don't have retail acting at that time, but the other times, yep, you could have gotten involved here, and what you're going to see is it just didn't go well every single time. So we know where resistance is, and we know it's 13.2, and the question is, what's going to be able to get us through that level? You can see we've been wedged in this area for some time, and sometimes you get over a little bit, and sometimes you don't, but the bottom line is the highest you really have ever been is that 42.05, 42.10. And then what happens? You just roll back down. So we're having the same exact issue here on the S&P. So what we're trying to do is figure out what exactly is going to be able to get us through that. And frankly, I have a couple ideas on what's going to do it, and we're going to get into it. But there's a lot we have to cover. For example, Goldman Sachs, not the greatest quarter if you go here and take a look at what happened. They missed on revenue, but look at exactly what's happening. So we are seeing a change in sentiment, and we're going to talk about that change and what it means for the market and financials. We're going to talk about the wild ride that Netflix took on its shareholders, dropping after hours in 3 minutes about 12%. After hours trading is not for the faint of heart. We're going to talk about what exactly caused this to come back and be flat ahead of the conference call. Why ISRG is up over $25, what analysts are saying about Tesla ahead of tomorrow's earnings. Hey guys, welcome back. We have a lot to go over tonight, so we're going to get right into it. So we can see our band right up here on the S&P. And frankly, the reason that we're staying in this range is we just don't have a driver. We just don't have a leading index that's going to move us higher. In other words, each sector is not really rallying. Now, overall, we're going sideways with the sectors, but we don't have any leadership. But it seems like that's starting to change. Now, if we look at February to April, we've come all the way down. We've retested that 3,800. We've bounced back since then, and we're back to 4,180. What this means is that obviously, when they sold down, we had buyers, right? That's unequivocal. It's really not up for debate. And you can obviously see that. You can see the entire supply on the way down. We can actually just look at that supply from here and just see how that acted. And then we had the exact opposite. You bottomed here. For some reason, this was the level 38.50, right around there, that we were going to stop. And then all we do from there is we just push higher, and you have that demand all the way up, which is nice, right? We'd rather have that. So I'd rather have that. It just makes life easier. So when you see that and you understand where you're at, it becomes pretty clear that you have a cup. That's how I view it anyway. And I would suggest that maybe you see it, maybe you don't, but it's pretty obvious that it's there in my opinion. And you can see that on the hourly. Now, maybe we get the handle. Maybe we do something like that where this comes down and we form a handle. I'm not really sure how this is going to play out, but we need a driver. And previously we didn't have one. We're starting to get one now. Now, in front of us is XLF, and I broke down XLF into an hourly chart because I really want to hammer this point home. Here's the volume that we've had recently in this name, and I think that this is pretty significant. This is our volume rate. So if we just take that volume and we just mark it for a second, let's just put a line there so we can see how significant that volume is that's starting to come into financial. And then we just kind of look at that and say, okay, since 2022, you've not had anything like that. Now, if we go out there on a daily chart, you might start seeing some signs and saying, yeah, we have seen something like that before. We've seen these dailies, they've been a little higher. But what it's telling us is that we're possibly forming a bottom. So you always drill into your charts, not out, if you're trying to figure out, is it setting up to turn, right? If you want to see a turn, you go into a shorter time frame. If you're trying to look for the major trend, you go to a longer time frame. But if you look at how this is playing out, this is pretty clear. You're holding every single level. Now, these were notes, and these notes were from the newsletter, and there is a link in the description to get the newsletter. Now, you can see here how we never even came down and tested this major support level, and that is really major support. That's the pandemic level. And then, of course, you have this level as well down here, which was the great financial crisis, which we cracked a couple times. But since the pandemic, we've not really gotten down here. So we're paying attention to that level, and we're seeing how we're acting on it. And we're acting fairly well. If you were to look at this, someone could even go out there and suggest that You had a lower low here, right? And then now what do you have? Now you have a higher low. So you could actually make the suggestion that financials are bottoming, and we're starting to see signs of that. For example, JP Morgan was one that we actually bought in the Alpha Chasers community. I bought it for a trade and it's just been working so well, I'm just leaving it alone. I don't see how you're not going to at least test this 143.5, but this is obviously a main driver. And JP Morgan, what was fascinating about the quarter was not only did they beat on revenue and earnings, but they raised guidance. So in the midst of all this, they're raising guidance. Now people will say, well, that's because they're taking it from the regional banks. Not all the regional banks were that bad. Now, I went through this yesterday, and all these videos are linked, so if this is of interest to you, you're going to want to make sure you subscribe to the channel because we follow through on the ideas so that you can see how they play out. But take a look at M&T, and you see how we're acting right in here, right? You can see that we beat earnings, which is great. But look at the difference. You're up 50% year over year. You're up 50% year over year in the middle of the regional banking crisis. And this is really important. Then you look at revenue, and revenue is up 67%. So if you start looking at these kinds of things, it becomes glaring. Now, you zoom out and you say, well, what quarter were we comparing to? We were comparing to this quarter where the stock closed at 170. And I understand there is more risk in the market now, but even though there's more risk, should this still be at this level of discount? And candidly, my answer is no, I don't think it should. Right now, you have revenues that beat by 70% and earnings that beat by 50% year over year, and you have a stock that's down 27%. If people are looking for a safe haven to get into regional banks, they're going to look at the ones that have come out with earnings and beat massively. And this is a great example of a company that beat massively. So we're starting to see that stabilization, but there's more to it. State Street Corporation, regional bank. Now, this quarter could be referred to as how we refer to dumpster fires. And what happened here was we missed by 7%. They didn't feel the need to come out and warn their investors that they were going to miss or that they were going to miss on the revenue front. They just did it. So once you see something like that, it usually raises a red flag and it makes people concerned. You opened at 66. You've never looked back. You're at 75. Okay. You're up $10 or 13% on this name in 2 days. So it is very clear that people do not think all these regional banks are going to go under. And I do think that it is possible to lose one or two. There are one or two that I'm currently short. But I think if you drill into these, like I did, and looked at these revenues, which we missed on the revenue side, beat on the earnings, but this was based upon trading, which we thought might be an issue. And you just see, we bought this today around 329 and change and had a very good day with it so far. Now, this has work to do, and obviously everybody can see this level and the issue that you're going to have here, right? How that is obviously going to be an issue, and you can see that right there, and that's definitely something we're going to watch. And we stopped right there, and you can see these levels and how we've been battling it. So we need to flip there to get really excited about it. And candidly, really what you want to do is you want to get above that level right there, 341. So I got a lot of comments to be more specific during earnings. So this video is more specific via earnings and individual names, considering what's going on in the market tonight. We're going to get into some other names as well. So if that's of help, please comment on that. Usually we try to go over more macro ideas, but there is a lot going on out there that, in my opinion, is very actionable. And I think we're in one of these spots where we're going to look back at banking in a little bit. And I don't know which one's going to work, which one's not going to work. But I'm getting the sense that we're going to look back on banking and be like, geez, do you remember when we could have bought BNKU down here or KRE, the regionals? My biggest concern with the regionals is I still think that there's some banks out there that could have some problems. And they're not being forthright, in my opinion, but we can say that for another video. I think that that is the one concern that I have. So I don't know that I would play that. As a matter of fact, on Saturday, what I did was I came out with just a pair trade idea where I said, I would go out there and just buy all the banks, go long the banks, and then just short the regionals, because I do think the banks are going to outperform as a whole and then underperform on the regionals. But you are seeing investment banks and they are being bought. Look at Schwab. This was not a bad quarter, and you completely, utterly reversed, and now you're pushing and you're going higher. There's very little to say here, and there's very little to do. So I like this a lot, and I think that this will continue to move higher, and I think you can test that 59 again. So we're seeing opportunity in these names. Now, at the same time we're seeing opportunity there, we're seeing rejection in the previous leaders. And I'll tell you why I think that is. And this is actually very healthy. I think we're seeing rotation into financials that did exceptionally well. For example, you have Microsoft here, and this is something that we are in the community, doing okay with, not knocking the cover off the ball, but we're doing okay. Now, if you look at that level and you go, okay, well, since January, you're up 33% Microsoft. That's a little insane and a little ahead of itself. But what we're seeing is these resistance levels, they're holding. And then we drill into them, and now you see Microsoft is holding right there, right? And we can see this. It's clear as day. Right around that 290 level, it just will not break. So, and until it does, we're going to have issues, and we just have to watch it. Now, it looks exactly like what? Well, this whole hump that's here looks exactly like one huge cup. Could it break out? Absolutely. But that doesn't mean that it's going to break out tomorrow. It can absolutely do something like this and then just stay here, head back up, come back down, and then go, right? There's no guarantee that this is just going to miraculously keep going up. And I think that that's what we have to realize. We have to understand what kind of market we're in. So we're starting to see a little weakness in the XLC names, which is not great because I really like the XLC names. And let's zoom out on this and get rid of this clarity. So here's our issue with XLC. And we see the cup, right? And we're starting to see more red selling than we're seeing green buying. I don't like that. It makes me happier if I'm long and I've got more green. So in other words, I like when they're green and they're long like that and you know, we're down and everyone's excited and they're buying. When you start seeing this, it could mean one of two things. One, it could mean exhaustive selling and that's a bottom. High selling will mark that, will mean no one's left to sell. Or two, it could be that that is not exhaustive and it doesn't look like that's exhaustive, quite frankly, because we've had opportunities like that before and that was not exhaustive. And we can just very clearly just come straight across and mark it and see that, right? How we broke here and then we went lower. And then we could use this one and go, well, we broke here and we went lower. So this is not a level that we could just confidently say, hey, we're at a spot here that is clearly an exhaustive move, considering that the indicator that we're utilizing has not worked once. So it'd be silly to say that. So I have to look at this and I have to pay attention to what's going on here. Now, we have been talking about this chart for some time, the SOXX, especially in the newsletter. And if you're interested in the semis that are coming out with earnings this week, ASML, Lam Research, TSM, make sure that you get the newsletter because we're going to be covering them. Now, see this level right in here and seeing how we're acting? Okay, that's really important. You come here and you see how we can't get through, and we just cannot get through 440. No matter how hard we try, that 440 level has just been our nemesis, and I'm just going to drop it in so you can see it. Now, I don't know why that's the level, and I don't think it matters why. I just think that we have to understand that that was support, and when it flipped to resistance, since then, we've been unable to get above it. And the other thing that I'm not crazy about is this. Now, you have a head here. You could argue that that is a left shoulder, and you could argue that that is a right shoulder. And you could actually take this and just drop it right here and go, well, there's my neckline. And I tried to break it once and I didn't. And I rallied back up, got the head, boom. So that's a pretty clear level, that 418, 420 level, let's call it in there, because it's a lot of noise, right? So I don't want to give an exact level because you're in there. And you can actually see that this even goes back a little further, but we don't really even need to go there for our purposes. So, okay, so XLC is not leading. SOXX isn't leading. What's going to lead? All right. Here's the XBI, the biotech sector, which obviously the NASDAQ is laden with. We're going to get into some names right now that actually continue to look good and push. But if you see these levels right in here and you can see how we're acting, right? You're flipping, you're going higher. Obviously, that's exactly what we want to see, but put in a couple moving averages here so that you can see exactly where we're at and what's going on. So I'm just going to show you these so that you know exactly what you're looking at. You're looking at the 200 SMA, and this is 890, and what we want is 855 here. So we're going to make that a 55, and you're going to see something, okay? You had your golden cross here, and we got our little move, and that's all we got out of it. And now we're getting that death cross. We need to stay above the 200. If we cannot get above that 200, this certainly is not going to be our leader. We are seeing money go into biotech. Now, I feel the need to preface this. I am not a biotech expert at any stretch in the world here. But what we have to do is we have to look at exactly what's going on. And these names like RXDX, they're being said that we're going to get bought out. They're getting bought out. Oh, look, they're going to go to 100 on the buyout. Okay, the terms are 200. So this company was trading at 30 bucks, 40 bucks, got some type of takeout offer where some investment bank said it's worth X. and then they got paid 100% over that. All right. This tells you that the market's mispriced. This tells you that there are assets out there that are in biotech that are mispriced, which is not surprising in this kind of market because people do not buy companies that bleed money. And guess what companies bleed money? Companies that don't have revenue, that are trying to create products to get their phase 1, 2, or 3 done. Now, I'm not suggesting you go out and buy this. I would look at it if it got into the mid 80s, if it sold down for some reason, but there are a slew of names out there that we've been playing with and that are long, and they are showing no signs whatsoever of letting up. APLS came out the other day, it was about 2 weeks ago, and they said, yep, they've been approached by a couple suitors and they're looking at all their options. Well, since then, we haven't had a lower low. So this would bode well for XBI if you start seeing these kinds of names. This was another one that we were playing with, this AXSM. I have no position in this one right now. I do in APLS. And I've been in it for a while now. But if you look at this AXSM and how you're flipping here, well, I mean, this is pretty clear. I tried the other day, and candidly, if you watch these videos and you've been watching for a couple of years, you'll learn one thing about me. Sometimes I'm early. I was early. We had the little pullback, and then you can see pretty clear right in there how we acted on that, right? And then we flipped. So now you're looking at that. I'm sure you can see this DTL with downward trend line, but I'll just pop it in so that you can see it as well. Right? And that's what we flipped, but I just didn't like my placement candidly. So I said, oh, I'll just come in today. And then of course it moves. So I do like this, and I do think you can get back to the range. Up here, this is when we came out with the information on the phase study, and whether somebody acquires this company or doesn't, I don't have any idea. And I'm simply not suggesting that. What I'm suggesting to you is that when you start seeing names like RXDX get bought like that, and you start seeing names like SGEN get bought like this, okay, where it is just time and time again, well, there's a mispricing in the market. That's obvious, okay? And people will say, well, do you buy LABU? I don't know that you're going to see inflows, and candidly, I do have a position in this. I don't know that you're going to see inflows into the entire sector. I think you need to do some due diligence on your name. Since we started looking into the names and which names are working, which names are not in the community, we're considerably beating what's going on in the XBI, which is really what we wanted to do. And I'll give you another example. VKTX was one. They came out. They had a really good study. Now it's rumored that, quote, someone may be looking at them, or a couple people might be looking at them, and that their product is so good that they might not even do anything about it. They just might keep going. They did a secondary the next day, and it was oversubscribed by 20 to 1 or something, just absolutely insane. It's never looked back. Formed a flag, tested the breakout, and it just keeps pushing. When you see this happening over and over again, I just gave you 3. I am sure there's a litany more. This could be the driver. This could start getting funds to go, you know what, we need exposure to biotech. Well, which ones do we buy? I don't know. Well, buy the whole index. Okay. I mean, that's how, I hate to make it so cavalier, but that's pretty much how it goes. We need exposure, right? We need exposure to this space. Something's going on. And the mispricing of assets right now in biotech is glaring. Okay, I have no formal expertise in these whatsoever. I can just tell by reading, the phase studies and how they come out, and then how the stock acts. I've played around with them for decades, so I have a knowledge of how they move. But as far as the efficacy, things like that, it's just not my wheelhouse. But if you look at them and you just do general reading and then watch the reaction, you can figure it out. And then you just start looking into when they're going to have their next meeting with the FDA, or what the next stage is, and then you'll know when the catalyst is coming. So now you can see why I felt the need to just stay on names, hopefully, versus just getting into some macro. And I've got some really good glaring macro data that we're going to go over tomorrow. So make sure you subscribe to the channel and click all notifications so you're made aware. Now let's talk about the roller coaster. Netflix comes out with earnings. They're not good. They're not bad. They just are. And you can see that first minute bar down right here, right? And then from that bar, you wind up dropping another 5% in 2 minutes. That's an enormous move. So the earnings were not bad, but they're shutting down their DVD business. That's not good, because someone else is going to get into that business. So instead of shutting it down, quite frankly, probably what they should have done was sold it, or done something, or spun it off. But some people like DVDs for whatever reason. People in the world don't want to just be hooked in and stream. Now, you might say, well, that's not the future. That's fine. It's still a multi-billion-dollar industry. So I don't know that that was the best news, and I don't think that was smart. It reminds me of something they did about 10 years ago, and it went over like a ton of bricks, where they split the services between streaming and DVDs, and it was an absolute disaster, and they wound up putting it back together. But that was 10 years ago, and times change. That was before House of Cards. Anyway, so if you see what happened here, we sold down, and then all of a sudden we put that bottom in. Well, the one rule that we always have in our community is you have the first 15 minutes. Okay? So if you miss it, you always want to watch that first 15 minutes and see how it acts. And if you don't break that 15-minute bar and you're short, you may have a problem. And the reason is because that's where the algos and the high-frequency traders try to get you. And all they did here was take you back to the gap, get the supply, and then you just saw the dump. So I think that this is going to have some issues tomorrow, quite frankly. I don't know that I would want to be going home long this. In other words, if I was fortunate enough to own it during the day, and then all of a sudden I'm out at break even, and I could come in tomorrow fresh, I don't see me holding this. Now, they're going to go after people that have their kids, or in my case, parents and family members on Netflix, and they're going to charge us $8. Now, the issue with this is I think it's going to be disastrous. I think in the short term, it gives them a revenue boost, but they need to come up with some kind of all-inclusive plan that you could just buy instead of getting nickeled and dimed and then calling them and saying, well, that wasn't me. I didn't log on there. And I just think it's going to become a logistical nightmare. Now, I could be wrong, right? It wouldn't be the first time, but this is not something I would go near, and I'd want to see how this acts tomorrow. ISRG is up about $25 right now after hours, sitting right in that level. And you can see, I'll mark this, it's actually perfect right into resistance where it stopped. So if you look at that, you can see where he stopped. Here are the earnings. So you beat by 3% and revenues were up by 6.5%. Guidance was good, and it just kind of drove the stock higher. You're starting to see some of these surgical names get a boost and get a move. Other names that are in here, you have the stent maker BSX, and you can see how that's doing, hitting all-time highs, as well as names like Stryker. You can see these names. You can see exactly what's going on here. Again, hitting all-time highs. If you are struggling, make sure that you watch this next video. It is about day trading. It is 10 minutes long, and it will help dramatically. It's probably one of the best reviewed or most comments I've had on an educational video that I've done. Everybody have a great evening, and comment on this format. It's a little old school, going with very specific ideas, but during the earnings season, I think that makes a little bit more sense. Have a great night, everybody.